We push on to our next session right now, and it will be a discussion on and off ramps in Africa. It's a virtual one, and there you go. Maya Caddle, who is the Chief of Staff at Nestcoin, has been patiently waiting for us. Maya, thanks so much for your patience, and really it's over to you.
Perfect. So today, as has already been introduced, we're talking about localization on and off ramps in Africa. Whilst on and off ramps sometimes are viewed as a less sexy aspect of crypto, they are nevertheless still fundamental, especially in the context of the continent of Africa, where there are a lot of nuances in terms of how on and off ramping works. But before we get onto that, let me begin by introducing myself. Who is Maya Caddle? So, as Sonia said, I'm Chief of Staff at an African crypto company called Nestcoin. And more relevant to this presentation, I also built one of the first non-custodial peer-to-peer on and off ramping protocols for the continent. I'm very passionate about localization. In fact, there's a small project that I started on this side called Immersion on Chain, and the whole focus is to demystify what African crypto looks like, how it should be localized, etc. So if you want to get data on African crypto and the scene and how it's evolving, feel free to scan the QR code and sign up. But I've been working in localization for a number of years now, helping and leading companies to expand and build products for emerging markets, whether that's across MENA, Southeast Asia, East Africa, and West Africa, across a variety of industries. But let's move on. So one thing I always like to start my presentations with is the data, because the data never lies, right? So it's clear, as I'm sure everyone in the room and everyone joining today knows, Africa is fundamental, not just for crypto, but for tech generally. And if you look at the demographic trends and the numbers, it's clear why. So by 2050, 2.6 billion people will be on the continent of Africa. So that's more than 20% of the global population will be African. 1 in 3 youths globally, so between the age of 15 and 35, will be African by 2050. And in fact, even in 2 years' time, 1 in 6 global internet users will be African. And this may be a controversial opinion for some, but whilst there's a lot of innovation happening in pockets of the West and parts of Southeast Asia, the core utility is in emerging markets like we have on the continent of Africa. And as you can see from the numbers, there's so much opportunity to really reach a lot of people and enable people to really benefit from the wonders and value of crypto itself. And so some people may be thinking, okay, well, localization for on-off ramps, what does that mean? Why does it matter? Well, people can't benefit from crypto if they can't access it. And there are a lot of nuances within the African financial stack, right? Not just between, let's say, the West and Africa, but even between African markets. So I'll give some examples. I'm British, right? In the UK, you can, when you're at a restaurant, when you're buying food, you simply take your Google Pay, your Apple Pay, or your contactless card and tap it, and off you go. Whereas on the continent, when people aren't using cash, there's other payment methods that people tend to default to. So from my time living, working, etc., on the continent, I've experienced, for example, in Nigeria, people use bank transfers a lot. So you could be at a restaurant, and to pay for the restaurant bill, you'll bank transfer the restaurant. In Kenya, as I'm sure all of you are aware, M-Pesa is king and dominates. In Ghana, it's MTN's Momo, which is MTN's mobile money, which has quite a strong foothold. And interestingly, I recently went to Zambia for the first time, and whilst MTN does have a strong presence there, it's actually Airtel's mobile money product that is really, really strong and really thriving in that market. So you may take away from that, okay, well, then I just need on and off ramps that have the right local payment methods. That's not completely true. On and off ramps in the context of Africa are about more than just the right integrations to local payment methods. And that's because of the world of what I call indirect on and off ramps. So whereas in many Western countries, you can just buy crypto and sell crypto and get it directly to your bank account or from your bank account or using your card, in parts of Africa, that's not possible. And so then you come about what I call indirect on and off ramps. P2P on and off ramping is perhaps a bigger subsegment of that. So let's go into the world of P2P on and off ramps. So one of the things I always like to begin with is just explaining how big and how almost naturalized P2P is within the crypto space on the continent. Whilst there isn't any, unfortunately, direct data about P2P on and off ramp usage, we typically use P2P exchanges as a good proxy. So 7 of the 20 top P2P exchange markets based upon volume were African, according to Chainalysis' 2022 Crypto Adoption Index report. And also similarly, Paxful announced in 2021 that Nigeria was their biggest market, with 1.5 billion USD being traded from Nigeria, sorry, specifically. So why P2P, right? P2P is popular, but what is the reasoning behind it? And in my mind, there are 2 key buckets. So one is user behavior and the other one is to do with regulation. So when it comes to user behavior, if you think about it, from what I've already established, mobile money and bank transfers is quite normalized in the African context across many different countries on the continent. And so P2P feels very similar in nature to sending someone money via bank transfer, or sending someone mobile money, getting their bank details, getting their number just to send the money. P2P has a lot of similarities to that behavior that's already present and prevalent in these markets. And another reason simply is a lack of alternatives. Historically, crypto has overlooked the continent. And so that means that people just had to be creative and find other ways to access the world of crypto and Web3 as a whole. And that's part of the reason why P2P also was born, because the direct on and off ramps, no one was really looking at the integrations that were required en masse to be able to service users directly. And the second bucket is to do with regulation, right? So P2P is a neutral option when it comes to regulation. So in some markets on the continent, you see that there's a regulatory separation between DeFi and TradFi. So let's be a bit more specific. Nigeria. Whilst some people believe that Nigeria banned crypto, that's not actually what happened. Actually, Nigeria's legislation says that any financial institution that is found to be enabling or allowing their users to buy or sell or trade crypto would lose their license. And so that meant that the traditional financial institutions, of course, didn't want to risk touching crypto. And so that's part of the reason why P2P solutions in places where there's regulation like we have in Nigeria do so well and are so popular. The other aspect is to do with official and parallel black market rates. So not all, so for example, I'm going to use Nigeria again as an example. In Nigeria, you have the official market rate, and that's what, for example, if you go to Nigeria with your Western card, you'll get the official market rate. Whereas and also on Google, that's what you'll see. Whereas there's a black market rate, and that is what Nigerian banks and Nigerian cards use. So there can be quite a big disparity between these. The official market rate, there was one situational time when it was $1 equals about 400 naira, whereas the black market or parallel market rate was $1 equals 780 naira. And P2P platforms feed into this black parallel market rate by nature of how they are created and how they exist. And fundamentally, P2P on and off ramps are easier to scale. You don't have to spend as much time trying to integrate with every local payment provider that you have across the continent. Instead, you just need to find the liquidity providers, find people who want to buy or sell crypto, and match them together. So if we're to explore the current state of play, traditionally and historically, the main ways of which people have done on and off ramping on the continent as a whole are WhatsApp and Binance P2P. So WhatsApp, I've been in numerous WhatsApp groups where literally people come on and say, I want to buy Ethereum, for example, and someone else will say, oh, I have Ethereum to sell. They'll agree a price, and then they will send one person, the buyer will receive the crypto from the seller and will send money to the seller, fiat to the seller. The problem with that, of course, is it's difficult to scale. How do you manage trust? Sometimes the admin of the WhatsApp group will act as a custodian, but then once again, you have to trust that admin. The other way in which another popular historical way of doing on and off ramping is through Binance P2P. Binance, of course, is huge on the continent, especially as early large believers on when it comes to and investors when it comes to crypto in Africa. And Binance P2P is amazing in many ways. But one of the challenges, of course, is it is tied to a custodial solution. If you don't want to use a custodial solution, what do? People typically then have to on-ramp via Binance P2P into their Binance wallet and transfer then their crypto to their non-custodial wallet or non-custodial solution. Equally, if you're trying to enter the African market, and especially if you are potentially a competitor of Binance, you wouldn't necessarily want to use or rely on their Binance P2P on and off ramps. So let's break down how P2P works. And this model is what I used to build my product, which is called Onboard. You can find it at onboard.xyz. And this is how P2P works. So essentially you have a seller and you have a buyer. What happens is the buyer comes onto the platform and says, I want to buy X amount of Ethereum, let's continue with that example, in exchange for Naira. And then they find a seller that meets roughly the terms of trade that they're comfortable with, or on some platforms, they're dynamically matched. What then happens is the crypto that the seller has in their wallet is moved into an escrow. And it's kept in escrow until the fiat transaction takes place. So the fiat transaction takes place off the platform, and the fiat transaction could simply be a bank transfer. It could be someone sending mobile money or moving money between different wallets. And what then happens is both the buyer and the seller confirms that this transaction has taken place off the platform. And it's only when both parties have confirmed that the crypto is released from escrow to the buyer. And in terms of Onboard, which is a Nestcoin solution that I built, what we've really been focusing on is how can we improve this stage and when it comes to the fiat, make it a bit more smoother, and also fundamentally around the escrow stage, right? How do you truly have a non-custodial P2P on and off ramp, which we have built, and it is available for use in Nigeria for the time being, but we'll be expanding at some point soon. Now, as I said, P2P is a predominant form of indirect on and off ramps, but there are other forms of indirect on and off ramps. And so I wanted to go through some of those now. So 3 key examples. The first is using airtime. So just to provide context, just in case people aren't aware of what airtime is and how it works. In many emerging markets, airtime is really important. Whereas let's say in the UK and the US, we go to our mobile phone provider and we buy our data package or bundle, etc. In some emerging markets, they buy airtime instead. And so what that looks like is they buy the airtime, and the airtime can then be used to buy data. It could be used to buy minutes for phone calls. It could be used to buy allowances for sending SMSs. And sometimes, in some cases, it can even be used to pay down some bills. And so airtime is really important. And in many ways, it's almost a digital currency in its own right. And so there are companies, most notably a Kenyan-based company called Fonbank, which focuses on enabling users to convert their airtime into crypto. And that's a really innovative way to enable people to on and off ramp. Another solution or another form of indirect on and off ramp that you can see on the continent is when it comes to what I call local currency stablecoins. So for example, if someone is sitting in Kenya, and they're trying to on-ramp through an indirect on-ramp. In this situation, this indirect on-ramp may have a Kenyan stablecoin. And what happens is that you then send them raw fiat, and then that is credited onto your account in the form of this stable coin, this virtual currency they've created. And then you can use that to buy and sell crypto. The third way is gift cards, and interestingly, this is how some of the more prominent exchanges on the continent now started. So most notably, Yellow Card started in this form. And so back in the day, what you could do is you could go and buy an actual gift card, sometimes physically, sometimes online. And this gift card you could then go online onto the platform and select what crypto you wanted to buy, and it would tell you how much based upon the value of your gift card, how much crypto you could buy. And so these are different forms of indirect on and off ramps. So that's an overview of how on and off ramps work on the continent and what they look like. I guess the key things I want you to take away is there's a lot of on off ramps that serve the West, serve Asia, serve LATAM amazingly, and also do say that they serve Africa, but they don't truly, in the sense that they don't have this element of localization and integration of the localized payment methods. They don't necessarily facilitate P2P on and off ramps. And so if you are a crypto project and you are looking for on and off ramps, be really mindful of that. I think the other thing is to be aware and understanding how P2P on and off ramps work. As I said, there's many benefits to them. It means you can scale quite quickly. It also means that you are a regulatory neutral solution, which is always a benefit given the constant changing environment we live in, especially in the crypto world. So thanks so much for watching the presentation. You can find me on Twitter. This is my handle. On LinkedIn, I'm the only Maya Caddle in the world. And once again, don't forget to sign up to Emerging on Chain to keep up to date with what's going on in African crypto and get some data about what's happening in the African crypto scene as well. Now, I want to give a chance for anyone to ask questions if they have any.
Maya, it seems like they have an applause for you rather than a question. I think just I think just indicating to the fact that they really enjoyed your presentation, and thanks for all the insights.
Thank you.
Thank you. Thanks so much.